$1,000. That is exactly what I lost. And I know what you're thinking. You're thinking, Dave, $1,000 isn't exactly millions. Why the drama? Because that $1,000 was everything I had. It was my shield against the world. It was 6 months of eating instant noodles, skipping happy hours, and wearing shoes with holes in the soles, just to see that comma in my bank account. And the scariest part isn't the money itself. The scariest part is how good it felt right before it vanished. If you think you're too smart to fall for a financial trap, or if you think I would never buy a meme stock at the top, you are already the perfect victim. Because I thought I was a genius. I thought I found a glitch in the matrix. But in this video, I'm going to deconstruct the biggest financial disaster of my life. I will show you the exact psychological triggers the market used to hijack my brain, the brutal math banks pray you never calculate, and how to actually build wealth without gambling your rent money. Put your phone down, close your other tabs. This is the lesson I paid a fortune for, and you're getting it for free. Let's go back to the scene of the crime, 2021, the year of madness. I was working a job I hated, sitting under fluorescent lights that buzzed louder than my thoughts. My boss was the kind of guy who thought unpaid overtime was a team-building exercise. I was saving money the responsible way, but saving money in the modern economy feels like trying to fill a bathtub with a spoon while the drain is open. Inflation was eating my cash faster than I could earn it. Every time I went to the grocery store, the prices were higher and the packages were smaller. And what did I have to show for my discipline? A savings account that grew by pennies. Meanwhile, I opened Instagram and saw 19-year-olds buying Lamborghinis because they bought a picture of a monkey or some coin named after a dog. I was angry. I felt like the system was rigged against the honest worker. And frankly, it is. But that anger made me vulnerable. Anger makes you blind. I didn't want 5% returns per year. That felt like an insult. I wanted 500% returns by Friday. I was looking for a weapon to fight the system, but I ended up pointing at it myself. That's when I found the group. You know the ones. A Discord server full of people shouting in capital letters, using rocket emojis like punctuation. And there he was, the guru. Let's call him Chad. Chad didn't talk about risk management or company fundamentals. Chad talked about revolutions. He posted charts with more lines than a conspiracy theorist's wall. He used words like parabolic, gamma squeeze, and the most dangerous word in finance, guarantee. He pitched a tech stock, a company that was supposedly going to change the world, even though they hadn't made a profit since the invention of the wheel. He said, "This is not financial advice," and then proceeded to give me the most aggressive financial advice in history. He posted screenshots of his portfolio showing massive gains. Of course, I didn't know then that Photoshop is easier to use than a trading platform. My brain ignored the red flags. Why? Because of a little bug in our operating system called confirmation bias. I was desperate for a win, so I only listened to information that promised me a win. I filtered the risk. I saw what I wanted to see. I didn't see a bad company. I saw my ticket out of my cubicle. Here's the embarrassing part. I actually thought I did research. I watched 3 YouTube videos, I looked at a balance sheet for 5 seconds, nodded my head, and pretended I knew what EBITDA meant. I didn't. This is called the Dunning-Kruger effect. It's when you know so little about a subject that you overestimate your own competence. I was a novice who thought he was an expert because he watched a 10-minute video. I felt powerful. I felt informed. So I took my $1,000 savings, my freedom fund, and I loaded the cannon. I pressed the buy button. Now, listen to me carefully. The moment you press that button, you are not an investor. You are a junkie. The stock moved up immediately. Green candles, plus 5%, plus 12%. My heart rate spiked. This was better than coffee. This was better than sleep. I started doing mental math. And this is where the poison enters the bloodstream. I wasn't calculating percentages. I was calculating my new life. If this keeps going for a month, I can quit my job in July. I can buy that car in August. I can pay off my mom's debt by Christmas. I wasn't looking at data anymore. I was hallucinating success. This is called the endowment effect. I started feeling ownership over money I hadn't even secured yet. I was spending my paper gains. For exactly 48 hours, I walked around like I owned Wall Street. I looked at my boss and thought, "You have no idea, man. I'm out of here soon." I was the smartest guy in the room. Then, the gravity kicked in. It started small, a 4% drop. "It's just a dip," Chad said in the chat. "The hedge funds are trying to scare us. Weak hands are selling. We are diamond hands." I repeated it like a mantra. Diamond hands. Another drop, -10%. Now logically, I should have sold. I should have taken my small loss, admitted I was gambling, and walked away with $900. But I couldn't. Why? Because of the sunk cost fallacy. My brain told me, "You've already invested this much time and emotion. If you sell now, you admit you were wrong. You admit you are a loser. But if you hold, if you just wait, you might still be right." The market knows this. The algorithms are designed to exploit this specific human weakness. They know you won't sell when you're down because hope is a powerful drug, and banks love selling hope to retail investors. And then the trap snapped shut. The stock suddenly bounced back up. It went from -10% back to -2%. I felt a rush of relief. "See," I told myself, "I was right. It's recovering." I knew I was a genius. I didn't sell. I held on, waiting for it to go green. But that wasn't a recovery. In technical terms, that's called a dead cat bounce. It's a temporary recovery in a dying asset. It lured me back in. It gave me false hope just long enough to trap me for the real crash. The next morning, I woke up to a bloodbath. -20%, -35%. I stopped sleeping. I would wake up at 3 a.m. to check the pre-market futures. I became obsessed. I was checking the price while driving, while eating, while in the bathroom. The Discord group changed. The rocket emojis disappeared. People started asking, "Is it coming back?" Guys, I put my tuition money in this. Chad, the guru, suddenly stopped posting. The chart turned into a waterfall. Vertical red lines, -50%. At this point, I wasn't trading. I was freezing. This is a biological response. When stress hits a certain level, your prefrontal cortex, the part of your brain responsible for logic and math, literally shuts down. You revert to your lizard brain, fight, flight, or freeze. I froze. I stared at the screen, unable to move my finger. I watched my $1,000 turn into $800, then $500, then $200. I was bargaining with the universe. Just let it go back to break even, and I promise I'll never do this again. I'll go to church. I'll call my grandma. Just give me my money back. But the market does not care about your promises. The market is a cold, unfeeling machine that transfers money from the impatient to the patient. And I was very, very impatient. Stop feeling sorry for me. We need to look at the math, because this is the part that ruins lives. This is the trap. Most people think, if I lose 50%, I just need a 50% gain to get my money back. Wrong. That is the lie that keeps you poor. Listen closely, because this is the most important calculation you'll ever learn. If you have $1,000 and you lose 50%, you're left with $500. To turn that $500 back into $1,000, a 50% gain is not enough. That only gets you to $750. You're still underwater. You need a 100% gain just to get back to where you started. You have to double your money just to fix your mistake. And it gets worse. The deeper the hole, the harder the climb. If you lose 90%, like I almost did, you don't need 90% back. You have $100 left. To turn $100 into $1,000, you need 900% gain. Do you know how hard it is to find a 900% gain? It's nearly impossible without taking massive risks that will probably bankrupt you again. This is called volatility drag, and psychologically, it's even worse. It's called loss aversion. Scientists have proven that the pain of losing $100 is twice the intensity of the pleasure of gaining $100. That's why we panic. That's why we make stupid decisions at the bottom. We're wired to avoid pain, But the market uses that instinct to slaughter us. Back to my story. I finally hit the sell button. My $1,000 was now roughly $120. I sat there in silence. The silence was louder than the screaming Discord group. The guru deleted his account. The chat vanished. I felt shame, deep, burning shame. Not just because I lost money, but because I felt like I had been tricked. I felt stupid. I realized I wasn't a wolf of Wall Street. I was just a sheep who walked into a slaughterhouse voluntarily. But here's the plot twist. That $880 loss was the best tuition fee I ever paid. It taught me that excitement is the enemy of wealth. If your investment strategy makes your heart race, you're doing it wrong. If you're checking the price every 10 minutes, you're not investing, you're gambling, and the house always wins.
So, how do I invest now? What did I do with the scraps I had left? I stopped trying to be a sniper. I stopped looking for the next big thing. I realized I cannot beat the algorithms. I cannot beat the banks who have supercomputers located nanoseconds away from the exchange. So, I joined them. Now, I'm a farmer. I buy index funds. I buy the entire market. I use dollar-cost averaging, meaning I buy a little bit every month automatically, no matter what the market does. Does it give me an adrenaline rush? No, it's boring. It is incredibly boring, and that is the point. Real investing should be as exciting as watching paint dry or watching grass grow. If you are having fun, you're probably losing money. I realized that get rich quick is actually just a marketing slogan for get poor immediately. The real wealth is built slowly, quietly, and without checking the price every 5 minutes. It's about time in the market, not timing the market. I paid $1,000 for this lesson, so you don't have to. Don't be like the old Dave. Don't let the flashing lights, the green candles, and the fake gurus blind you. The system is designed to trigger your dopamine, steal your logic, and take your cash. Fight back with boredom. Fight back with patience. I'm building this channel to expose every single trap they set for us. We're going to navigate this minefield together. If you want to survive the financial war zone, hit that subscribe button. And listen, while we're talking about losing money, there's a silent killer eating your paycheck right now, and it's not the stock market. It's your own bank fees. You might be paying them monthly without even noticing. Click this video right here. I'm going to show you how to plug that hole before it drains you dry. I'll see you there.